This has been the ugliest month for Bitcoin since it collapsed over $30,000 back in May of 2021, going back nearly 3 years. And the fear, the extreme fear, is spreading across the rest of the markets. Obviously, we know it's been through altcoins already, meme coins basically destroyed, but now we're seeing it even more so in the stock markets, the traditional markets. And of course, part of our theory is that we need to see positivity, some greed, some stability, and less volatility return to the traditional markets in order for Bitcoin to continue up. If that's a bit of a mouthful, don't worry. We're going to explain it here word for word on the channel, and I'll explain to you what I'm doing in these times. Hit the like button, subscribe to the channel. It's your home of macro cycle analysis. As I said, I'm going to go through the stock markets, Bitcoin, some altcoins, and of course the macro cycle. I'm going to feed you a lot of data today, looking in particular around Bitcoin and the stock markets with the data for January, February, March, and what happens throughout the rest of 2025 from a probability basis looking at the stock market. All right, guys, let's start it off after you hit that like button down below. Go for 3,000 likes, why not? With a video I did just over 2 weeks ago now, February 13th, looking at the Bitcoin bull trap. This is what we're looking at, Bitcoin to go up. In this case, it only made it to around 99K, which was underneath the 50% level. Basically came right up, hit the 50% level, and then crashed from that point. Obviously now somewhere around $84,000. So the bull trap was set, it played out, and here we are. We're now back down to $84,000, $85,000 as I'm recording this. Now, as I said, just some of the basic details. We're down 17, 18% on the month. There's about a day to go here before the market closes. And in terms of the correction itself from the top, it is now at 25%, so $27,000 from the top. So there's a bit of negativity, or basically bearish data that we have to look at before we can flip it into the positive here. And for BTC, we're somewhere around the first major support level that I've been watching, and that's our 50% level of the entire range. This is the August low up to the January top, corrected down. It's still, once it gets there, or if it gets there, it's still only going to be a roughly balanced correction here of 27%, with the last correction being 33%. Now, the one thing that is greater here is the dollar value. So if it does get to around that 50% level, it's going to be about a $30,000 drop from the top to the low. However, the previous correction was only $25,000. So in that case, there is one warning sign there, which is basically an overbalance in price. However, the silver lining here is that the previous correction lasted a very long time, 1, 2, 3, 4, 5 months into the low. And so if this time doesn't last, or lasts 5 months or less, more so on the lesser side, then it won't meet the criteria of an overbalance in time and price, which you might know from watching the channel is a very, very strong signal that changes trends. It was the same signal we looked at in September of 2024 that told us the trends were changing. We're able to buy up Bitcoin under 60K and then ride it up to the tops here at around 108, 109. So that particular signal changes macro trends when you're looking at it from a macro perspective here. So long way off, that would take you out to May. We're still looking at February and into March being quite volatile. Maybe a low is going to come in for March, and then we start to move from there. But in terms of just the pure raw numbers, that's where the market sits. It's still above the previous top, so nothing really to get too concerned about here. But I am just looking at the support levels to the downside, which aren't too far away at this point. But the fear has also spread, as we were looking at, across to the stock market. At least this case for crypto, the Crypto Fear and Greed Index for Bitcoin, it's jumped up a little here. Extreme fear 10 yesterday, and now it is at 16. And as we covered in yesterday's video, as a quick recap here, the time frames from these tops to the bottoms can last roughly around 4 to 5 months. And we're currently at about day 98. And that is from the peak of the extreme greed, which is not the same as the peak of the price. So something a little different there, just to let you know. We're at day 98 now. So yesterday was 97, we're into day 98. If we get to the 4 months, that'll take us out into roughly mid-March, which, as we'll see, a lot of these other signals and data points are also lining up for something in March, and then potentially that reversal from there. So in the short term, still no reversal signs here. You can just see an inside day happen yesterday, some higher volume here. But once we start to see some reversals, then we can get a little bit more excited that the bottom is in. Until then, it's not a great sign to try to pick the bottoms. Now, the Fear and Greed Index, as we said, is also grinding around. The worst times here for the total crypto market cap as well is now down $1 trillion from the top, 1.05 trillion, that's 28%. But again, the previous correction was 1.03. So relatively balanced corrections here for the total crypto market cap, which of course is made up mostly of Bitcoin, and then throw in some of your other top 10s there and stable coins, of course. In the previous cycle, we had 1.45 trillion for those couple of months, big collapse, 56%. Then there was a 1.52 trillion, so pretty equal there. And then there was a 1.41 trillion, which basically took you into very close to the low at $750 billion. So 3 relatively balanced corrections there. Long-term scale here, we've had 2 balanced ones now in this market. This one hasn't turned around yet, but we'll keep watching this in terms of the price and the support levels for the total market cap. Now, something else that is also correcting, I'm trying to get all the fear out of the way at the beginning of the video, and then I'll let you know about the good stuff. MicroStrategy has collapsed yet again, 56% down. I started talking about this in December after these massive big pumps up, because this is what I'm looking at for this cycle is a potential canary in the coal mine, basically a leading indicator. Who has leading indicators? We'll see. We'll see if this works out. But we're watching this for price action and what traders are actually doing, not the bullshit that I read and see on Twitter with, up only sort of accounts and traders, investors, fund managers that are just all in on MicroStrategy and this sort of stuff. I think I saw one yesterday on X, but lower highs after lower highs, breaking very significant support levels after more significant support levels, and now coming back to test some of the last standing support levels besides the previous resistance level at 180 and then the lows here at about 100 to 120. There isn't much left here for MicroStrategy to stand on. That doesn't matter for Bitcoin. So that's the flip side. It doesn't, I don't think, anyway, at least from what I've seen in terms of my own analysis and the history of both markets, it doesn't necessarily matter if MicroStrategy is taking an absolute ridiculously massive dump, because this thing can run into a lower high. And so you'll get all the moon boys for MicroStrategy coming back saying it's wrong, it's going up, and we're going to hit new highs, whatever, that's fine. I'm just going to keep following the chart. I suggest you do the same and just check out how these highs come in towards the later half of this year, basically the Q3, Q4. This reading up here is 271 days from the current all-time high, which was November 2024. The reason being is last cycle was roughly about 9 months. Now, give or take, maybe it's going to be 10 months, 11, 12 months from the top. That's not, it's neither here nor there. It's mostly the pattern that we are focused on here, because February 2021 was the all-time high, April lower high, November lower high, and then basically the MicroStrategy collapsed from here, and so did BTC. So this is working out relatively similar to what happened in the previous cycle, but Bitcoin put in higher highs, remember, put in its final higher high in November. So long and short of it is, the weakness is forming for MicroStrategy. The cycle, we can now get a bit of a countdown indicator on here. And I just want to have a look at how much time is left. Should this repeat with the exact same time, but I'm not saying that it's going to be the exact same time. I'm just looking at here, 173 days. So that would take you out to roughly that 1100 days that you look at for each of the Bitcoin cycles. You might have recalled each of the previous cycles have lasted roughly 1,100 days, and the previous cycle 1,100 days, and the previous cycle to that also 1,100 days. We're currently into our 800 and something-ish day, therefore a couple hundred days left to go, give or take. And we could be right around that same sort of timing for another peak. Now, another market which is having its worst month, ugly months here, that's the flavor of the beginning of this video, before I get into the good stuff, is Tesla. So Tesla's had another shocking month. It is its second worst month on record. It's at $113 loss just for the month, high to low. But if you measure it from the open to the current close, yeah, there's still one more day left, so maybe this thing bounces like a rocket, we'll see. But for now, it's at around $123. So still one of the second worst monthly record here for Tesla. When that happened last time, it was in January 2022, so going back 3 years. And after those periods, yeah, it bounced a lot. So traders, get ready. You're going to have probably some great volatility here to trade in the market. But after that, another move to the downside. So really what I'm sharing here is there are a lot of things that are looking like the volatility is picking up as we've been focused on for the 18-year cycle. The end stages of the cycle, you see a lot of volatility, big moves to the upside, big moves to the downside. There's still plenty of support here, so this thing can rally. It's going to be great for traders. If you start to see it break down from some of the key lows, different story. Just like what happened last time when we were following this in 2024. This was looking shocking. I was talking about it. It was looking pretty damn shocking. Got rejected a couple of times at the 50% level, around 250, 270. And then on the breakout, you got to flip to the long side because it broke a triple top, took off, and is now almost all the way back down to that same price. So those bulls have basically given back all of the gains at that point. Now, something else where the fear is spreading like wildfire is the AA investors here, the members, that is, 60%. This reading just came out in the last day or two. They are 60% bearish on the markets in the next 6 months. I've talked about this before being a fantastic contrarian indicator because these guys get it wrong and they've been getting it wrong since 1987. That should be their slogan. Every time they get to the extreme points, the market usually flips. We watched it all through January and February. They were at some of their most bearish levels at the lows, and then they're at some of their some greed levels, right? Not the most greedy, but in that current period, they were at pretty greedy levels. Got to get my greeds and my fears right here. At the peaks, and then when it hit the peaks, it came back down. They got super bearish again. It rose back up. They got super greedy again, came back down. That's on the S&P 500, and that was through this period here, and a couple of times through February that we were watching. And as I'm recording, Trump is on the way down yet again. Trump coin there. So meme coins getting flogged like they should. So over to the fear that has spread into the market, probably on the back of tariffs. You can name anything here, looking at headlines that the market or the media and the news always bring up. We're watching the double top that has come in over the last few days, last week and a half, failed at the 50% and then got rejected again to the downside. It's taken out a couple of lows here, and the next target, as we said in yesterday's video, was looking at somewhere around 5,800 points. So basically just coming back to the low, but then looking at the extension of the double top. The reason we look at those areas is to see how the market performs at support or resistance. In this case, it's potentially support. And if it shows some strength there, well, then you could assess that you might see a bounce, come back up and test some of the previous support levels. If you can overcome that, then you start to see some strength come back in. It seems relatively forward, but generally, when this price action is playing out, in this case to the downside, you see extreme fear in the market. This, I read, was the 6th highest reading since 1987. The 6th highest reading of fear for the AA members, where they think the market's going to be over the next 6 months. And the stock market is only 4.7% away from a new all-time high. And they are at their most bearish there. Maybe this time they get it right. And in the next 6 months, this market has collapsed out a bit. But how I'm playing the game is, what I've got in the title and what I want to show you with the data, doesn't seem likely. Obviously, as a trader and investor, you've got to have an understanding and a position for both sides of the market, or a plan for both sides of the market. But you've got to put your money where your mouth is and go with one of them until conditions change. And in this case, well, conditions are still as they are. We haven't seen any sort of breakdown from this trading range, plus no significant breakdown of the macro structure here. We've talked about these levels many, many times, 5,100 points. So until it gets there, you just keep watching for all of these support levels to come in. Next one being 58, then the lows and the previous old all-time high here at 57, and then take it back to the 50% level. And we can worry about that in the coming days or weeks. The extreme fear continues to spread here. So first was a AA. The CNN Business is also showing a lot of extreme fear for the stock market. Yesterday was 21, today is 18, and it continues to fall off a cliff here. Last time we saw this was the August low. Remember that was at 17. So we're 1 point off that right now. And again, I would say that it's a similar sort of play in the market as what we looked at with Bitcoin. And I went through this in great detail in yesterday's video, so I won't repeat it here, apart from just look at the time frames on how humans that make up the market, not just your AIs and your bots and quants, programming that's already been done. The humans are the ones that create this, and they basically do the same thing almost to a T every single time. Pretty similar time frames here. So in this case, I'm just looking at the fear and greed before I get too over the top. Overview, 21, today 18, and with the previous dump, it got to around similar levels here in August, around that sort of 17, 18, before there was a significant change in trend. The data suggested for February, again, posted this a couple of days ago, looked at this. This is something that Ryan had put up even before this. It was around the middle of February and showed that the second half of February often goes down. And in terms of the numbers, the second half of February tends to be weak. S&P 500 average performance per day, 74 years, and February being one of the weaker times here, you got a lot of negatives. Negative day, flat, negative, flat, negative, flat, negative. A little bit higher here, bit of a climb there on the 24th. A negative, basically flat, negative, negative, basically flat as well. So not the greatest time. The greatest times come towards the end of the year. October, November, you can just see how there's far more green days and they line up with each other. There's a lot of consecutive green days there. You got a little bit through April, a couple of times in March as well. But yeah, February doesn't look the greatest here. Moving on from that, what happens when we have a higher January and a lower February? So this was the stock market, this is the S&P, throw it on a monthly. You can see that we've had a green January and now a red February. 1 day to go. This market would have to bounce from the current close up to the open. So it'd have to bounce 100 points, 1.7% in the next 24 hours. So basically a close above 5,982 is going to give you a flat, maybe a green February. But if it closes the way it is, you've got March. So basically green February, green January, red February, March. What happens? 62% of the time, so 6 out of 10 times, it's a green March. But I'm not concerned with just 1 month. I'm concerned with the rest of the year. And that also shows that maybe we do have a bit more of a dump to come in March before it starts to bounce back. The average, 0.2%. The median, 1.5%. So a little better there. Average years for 75 years, you got 1.1% for the March and the median 1.5, high 65. So basically the same there. Now we're looking at the final 10 months of the year. So going from March 1st to the 31st of December. Now this looks a little bit better there, 75% of the time. So 3 out of 4 times you're going to see a green close to the year. So although we've got a lot of this fear coming into the market now, we've had like one of the worst months across the board. We've looked at it on Bitcoin. We've looked at it for the total cryptocurrency market cap. Of course, this data is referring to the S&P stocks. We've obviously looked at Tesla. We could go through a whole lot more, but I know you've got other things to do with your time. We're seeing that the data is suggesting we'll see higher upside towards the end of the year. Therefore, my theory, and you're welcome to have your own opinion, my theory is we're going to see higher prices for at least Bitcoin. That's the one I'm mostly focused on and pay attention to. Altcoins will ride them as they need to, but we're focused here for BTC. So once it starts to show some clarity in the trend again for the S&P, remember this is exactly what we've been looking at. It's been sideways just like previous cycles when it chops around like 2018, when it chops around like late 2016, you don't necessarily see a nice clear trend for BTC. Once the S&P gets on a clearer trend like it did 2017, like it did 2021, like it did in this second half of 2023, this nice move up into new all-time highs in early 2024, you get a clearer trend for BTC. Now it's chopping around and we're seeing the same sort of thing happen for Bitcoin, chopping around. So that's the positives here after a lot of this worse stuff that we are seeing. One more massive one for 2025. I know you've got time. Let's have a look at it. It's more hopium for the rest of the year, even though this time feels terrible. The sentiment's down. The cycle composite. You've got looking at the 1 year plus the 4 year plus the 10 year. Basically bringing together lots of different cycles here and then constructing a roadmap. Looking at the 2025 cycle composite. So it's different to the way Gann has done it, but I think it's also important to have a look at because we watched this one last year that Seth put up for 2024 and it worked very, very well. 2025, you are here. You're somewhere around these lows. If we start to get a bounce and then fall into March, well, that would be pretty typical of these cycles. And then reasonably explosive move. I'm not counting on it having to be that explosive, but it could. Years ending in 5 typically are pretty good. Then it could be another stressful period for investors, July, August, September, October, and then a nice run to the end of the year. So that kind of seasonal thing that happens at the end of the years. Now, the problem that most people are going to find is that they are not going to be in the markets around these lows. They're basically given up. We've seen it in the comment section. You're still here. Hopefully you're not giving up, but you don't have to be giving money back to the market either. Just continuing to follow up with the charts and the analysis. Now, if you're struggling with that, especially in the difficult times, may I suggest TIA Premium. Go and check out what the traders, investors, our members are doing over there in the short term and the long term. We have a sale on right now. Link will be in the top of the video description. Name, email address, and that will be going out in the next few hours so you can get the coupon code to join up with TIA Premium. It's a fantastic time to do that, especially when the markets are down and confusing because it sheds some light on what generally happens next. And you've got another active community of traders and investors to work with through some of these more difficult times. Because what typically happens every time is that people give up through here, takes off, they get interested here, and then it does nothing for another period of time, month or two, they give up again, they get interested again at the peaks, and it's rinse and repeat. And that's how people typically lose in the markets. So don't let yourself go through that again through this period before we start to move again in the markets. Just looking at what the data is suggesting, use this time efficiently, learn, put a plan together so that you are confident through this next stage of the cycle. As I said, name, email address, link is in the top of the video description. This is what your dashboard will look like. Heaps of stuff to use here, heaps of courses to run through. So plenty of time now that the market is a little bit more quiet than what it typically is when it starts to take off. And take off it will, at least in my opinion, as we're seeing some of the signs of a base beginning to form, like we saw through 2024. The exchange volume finding some lows here, then starting to rise, lows, rise, lows, rise, and then the lows be getting a little bit higher. Okay, so we saw the $43 billion low come in, and over the last few days, it's risen up to about 61 billion. So exchange volume, the way I'm looking at it, is basically just more traders interested in the markets again. Whether that's to the short side or to the long side, money is changing hands, and we want to see more of that change hands so that we can start to see a move back up, at least to new all-time highs. Liquidations are up at $500 million today after 2.7 billion over the last 3 days. So basically tied with the largest period in history of liquidations. Yet to see a change in trend for Bitcoin and some of the alts yet, but at least there's been a slowdown on the price action. So maybe we start to go through a little bit of a dead period yet again. So some more good signs here that the market is recovering from this extreme fear. It's basically washing out the last of the degenerates. The USDT, however, has just pushed past 50%. Now the day is still young. We're at 22 hours, 2 hours to go. I suspect Bitcoin is moving down as I'm filming this, and that's exactly what is happening. So Bitcoin has now tested the price here of 81. Okay, so I'm looking at 81 to 79K as the next area of support. Be interesting to see what the Fear and Greed Index comes up like tomorrow after the price has moved down below the previous lows. Do we start to see a divergence, or do we continue to see, the sentiment play out with the lowering prices, so prices going down and sentiment continuing to die off? Because we started to see the opposite through the bear market bottom. So the bear market lows, you had June really tank to some really disgusting levels at 6 on the Fear and Greed. The price went lower, but the sentiment was higher. Sure, it was still extreme fear, but you basically washed out enough of the fear so it could rebuild, so it could heal and then start to head higher. So that's what I'm interested in now. USDT, that's where I was going. The closes above the 50% level are not going to be great for Bitcoin and cryptos, but if it's short term, not an issue. We just don't want to start to see monthlies. Potentially multiple weeklies would be bad as well. But if you start to see some major monthly closes above this level, not going to be a great sign. But for now, here we are. 22 hours to go. Let's see what happens. And the next level is around 5.6%. Do we see ETH continuing down? Of course we do. Why would ETH be holding up if Bitcoin's dropping? ETH is now hitting 21.88 for the low on the day. Rejected at 29. It needs to get above 29 to hold this, to hold this structure here. Otherwise, it's got some further downside to test. Next target's around 2K, which is the 50% of my move here. Apart from that, I'd have to leave ETH because it's still in its trading range. I don't want to be looking too bearish to some of the larger targets to the downside. Let's just see whether it can hold the line somewhere around 2,000 to 2,100. Solana, on the other hand, continues to show weakness, obviously breaking down after the signals that came up for us in November. 3 bar rules, fantastic. 3 days down in this case from a very significant top, which tested the previous all-time high. So that showed the weakness. Then we saw 3 weeks down, lower highs, lower lows, forget the green and the red. And then we saw it again at the top. And so the weakness has just continued to flow through. It's broken the 50% levels. At the moment, unable to reclaim them. It's got to get back above at least 152 to show any sort of strength of testing the previous support levels. They could act as resistance on the way back. Otherwise, the weakness just continues through to come back and test around 100 to 120. XRP, sure, it's heading down, but it's still above the 50% at $1.80. So really not much has happened over the last couple of days. It continues to show some minor strength in the face of all of the markets heading down. $2.03 is my 50% extension, so it's still holding above that. If that breaks, then I'll be looking at around 180 down to these levels and this level here. So that 120 to 140-ish level. And the final one here is SUI, also heading down after trying to test the 50, trying to test underneath these lows, and just did not happen. Got rejected back down here at 269 as I film this. Next levels are around 240, and then the previous all-time highs at about 220, 225. So that is the altcoins. Yes, there can be some fear that is showing up here, and it might have a little bit further to go. And as we looked at with the statistics of the second half of February tending to be weak, also the January and February months. But the flip side to this is what comes next. The data suggests we get a nice end to the year. March is still looking like it could be a bit of a shit show for the majority here, especially if this weekly bar continues to close lower for the S&P 500 and drops underneath the 5,800 points. That would put it into a pretty weak position. I'm starting to lose my words. Link in the top of the video description for the sale on TIA Premium coming out in the next few hours. So check your inboxes, check your spam, like, subscribe, check out the video popping up on your left-hand side for yesterday's update, and I'll see you back here at the next video. Till then, take care and peace out.